Do you want to make money with crypto without guessing prices, waiting a long time, or sitting in trades? I'll show you how you can turn the difference between spot and futures into profit and earn from it. Yes, this is called spot plus futures arbitrage. We take advantage of inefficiencies in the crypto market and make money from them. In this video, we'll break down this strategy in detail. I'll show you how to find spreads and how to profit from them. So make sure to watch until the end, give it a like in advance, and subscribe if you haven't already. Let's get started. So let's start with the basics. What is spot plus futures arbitrage? There is a difference between spot and futures. That is, the token is cheaper on spot and more expensive on futures. We buy on spot and at the same time open a short for the same amount of tokens on futures. In other words, you need to have a position for the same number of tokens, on spot and on futures. On spot we buy, on futures we short. As a result, we've locked in the spread. When the spread narrows, as soon as it does, you don't necessarily have to wait for the spread to close completely. You can wait until the spread is already close. You close the position, meaning you close the futures and at the same time sell the spot position. It's important to do everything very quickly, because if you hesitate, inefficiencies will arise that will eat up your profit. And because we found such an inefficiency between spot and futures, we capture it and make a profit. To make it easier, let's break it down with an example. The token costs $100 on spot and $102 on futures. What do? We buy 10 tokens on spot for $1,000. And at the same time, we short 10 tokens for a total of $1,020. Accordingly, we've now created an inefficiency of $20. Look, when the spread closes, let's say the token price is now $101 both on spot and on futures, we close the position, we sell the spot. Accordingly, the price of our spot will now be $1,010. So we've made $10 and the futures will drop, giving us another $10 profit on the futures. In other words, we had $1,020, now we have $1,010 plus $10. These $20 are our profit, which we've taken. So, in the simplest way possible, without guessing where the price will go, up or down, we capture the efficiency and make money from it. Of course, there are risks here. First of all, from those $20, you need to subtract the commission. Commissions are usually small, but the profit should cover the commissions. Naturally, there are commissions both on spot and on futures. Commissions are lower on futures and higher on spot. That is, if you open positions with limit orders, you pay even less in commissions. There is also a financial risk. If the price rises sharply, there could be a forced closure of the futures position. To prevent this, you need to calculate the margin correctly. The third risk is liquidity. Accordingly, with some tokens, especially those with low liquidity, trading volumes can be small and you simply won't be able to enter with a large amount. If the trading volume there is $10,000 and you try to enter with $1,000, you will significantly affect the price. Naturally, you need to pay attention to trading volume and liquidity. And the fourth risk is that if you use high leverage, naturally you can get liquidated. That's why it's recommended to use up to 3 times leverage and be careful with your margin, meaning you should always have 100% margin on the exchange. Because if you don't have enough margin, you can simply get liquidated. And now for the best part, how to look for a spread. If before you had to monitor dozens of exchanges and check everything manually, now there are tools that help simplify these tasks. One of these tools is Arbitrage Scanner. Arbitrage Scanner makes the work much easier. It finds spreads for you. You simply enter the parameters you're interested in, and the spreads for tokens are displayed in a convenient table format. There are filters like these, meaning you can choose the exchange to buy on, the exchange to sell on, set the minimum and maximum profit, adjust the transaction amount, and select the spot plus futures strategy. Next, a table with the spreads is displayed below. I'll pause the updates for now so we can take a look together. Look, it shows us the token where there is a spread. You can also view the history of its spreads. Let's go in and look at the spread history for the BIT token. What is the purpose of this spread history anyway? With it, we can track what the spread is for the token, how much it diverges, and whether it actually converges or not. If the spread for a token is constantly holding, then we don't enter such a trade because it will likely keep holding like that. If we see a divergence in the spread and then the spread converges, that's a great opportunity to make a profit. Right now, we've only just started to get a spread history, so we don't have much information here yet. But we can see that there is currently a significant divergence for the BIT token. Accordingly, we can make money together because until now we didn't have any spread history and now it has just appeared. And now the spread continues to grow. So we can gradually build up a position, watch and wait for the spread to converge. Let's go back. We can see that there are spreads between different exchanges. That's LBank MEX, LBank Gate, and there was another exchange, but now the spread has disappeared. That's it. So, we go to the spot market on LBank, buy this token on spot there, and on MEX, Gate, or another exchange where the token is more expensive, we open a short for the same amount of tokens that we bought on spot. When the prices converge, we close our futures position and sell the spot. And the difference that we locked in beforehand turns into profit. Also, the funding rates are displayed in the table here. Basically, you can customize the table for yourself, meaning you can choose to display only the parameters you need. And this way, it's convenient to look for spreads in table format. Again, right now the spreads are small, but there are inefficiencies in the market during periods of high volatility or when there are new listings. On one exchange, a token is being heavily bought, while on another, it's being heavily sold, which creates spreads, and that's how we can make money. And the Arbitrage Scanner software helps to find the most efficient spreads like these. You don't waste time manually going in, searching for something, digging around. You just come here, set the necessary parameters, see the spread, go in, and take your profit. Besides that, you can set up notifications to a Telegram channel. Again, in previous videos, I've shown many times how to set up these notifications. You set up notifications and you don't even have to sit and monitor anything. You just set up a notification for yourself. The notification comes in. You see in your Telegram channel, okay, this token, this spread. Let me show you an example of how this works. It will show the spread, the exchange to buy on, and the exchange to sell on. And so the spreads are displayed as convenience signals. You simply choose the spread that suits you, go in and take your profit. And now the main question, how much can you earn from this? Here, the only limitations are the spread and the volume. Again, you need to look at the trading volume and check the spreads. On average, if you calculate it, you can earn 1 to 3% per trade. If the inefficiency is much greater, for example during listings, there can be spreads of 15 or even 30%, so naturally, you can earn even more from a single trade. If you make several trades a week and increase your amount, you can achieve a stable income thanks to cryptocurrency arbitrage. And most importantly, you don't have to guess where the price will go, up or down. You see an inefficiency in the market, enter and take your profit. That's why, to look for spreads, I choose the Arbitrage Scanner. If you purchase a business or higher subscription, Arbitrage Futures become available to you. Accordingly, you can arbitrage not only spot plus futures, but also futures plus futures. That's why I recommend a business or higher subscription, because with the starter subscription you'll only have access to the Arbitrage Scanner, which shows inter-exchange arbitrage. But starting from the business subscription and above, you'll get access to futures arbitrage. So choose the subscription that suits you best. There are special subscriptions available at the bottom. And also, the more months you purchase, the cheaper the subscription becomes. Plus, I have a promo code that will give you 2 months of subscription. So for example, if you buy a business subscription for 1 month, you'll get 2 months instead of 1. That's why my promo code is in the description. Dive in and try it out for yourself. There is a trial day here, but I still recommend buying at least the business subscription, testing it out, trading for a month, and then looking at your results and increasing your deposit accordingly to earn even more. I hope this video was helpful. Together, we went over spot plus futures arbitrage, how it works, what risks there are, and how to find spreads and make money from them. If you found this video useful, be sure to leave a comment, like, and subscribe if you haven't already. And I'll see you in the next videos. Bye everyone!